This is David Patrick, Fitzstock Charts, weekend market analysis. Charts Away Sleep, week 22. We are in a 15-day downtrend, and I'm going to make this video relatively fast because this is take two for me. I screwed up the first one. The weekly is still bearish, 200 SMA on the Dow we're going to look at. That's very, very important. Historical chart pattern comparison to 1957. And our year-to-date performance numbers are absolutely crazy. 204 different options engaged. 1 no scale, 19 losers, 184 winners, 90% win rate, unheard of in the industry. We've batted over 750 since we launched the service, and now well over 750 with this year at 90%, which is unheard of. Our 90% club is crazy, absolutely crazy. 115 options this year. So of the 204 that engaged, 115 have doubled. Some of them are up 200, 300, 400%. 1,058 options have doubled since we launched the service back in 2013. 31 triplers year to date. Crazy. And we're starting to see a lot of them getting paid on the short side. Do you have to short stocks? No, you don't. Do you have to day trade stocks? No, you don't. The service is meant for swing traders. Can you also day trade if you choose to and that meets your risk profile? Absolutely. Can you also short stocks if that meets your risk profile? Yes. Do I need to do those? No. What do you need to do in downtrends and no trends? Preserve capital. Preserve year-to-date gains. We talk about it every day on Twitter and every time on these videos. I hope you're listening to the tape. I went all cash back in May 10, 2019. This year I went cash October last year before the market had crashed. I'm not trying to say I'm an oracle, I'm a predictor, or a prophet. I'm just telling you I use our rules of engagement. I get flat or in cash for a reason, and I get aggressively long, leveraged long for a reason because I believe in the methodology. I know it works. You know it works. Here's 1957 on the left, 2019 on the right. There's 57. There's 2019. Okay, so we have the death cross right here on the left. There's our death cross, right? 50 through the 200. Golden cross right here. Golden cross right here. 1957, you came and touched the 200 SMA. After what? A lower high. Dow Jones on the right, lower high. Touched the 200 SMA, broke it. So we're right here. We're right there, breaking it. So this level back in 1957 is huge because we didn't get back above that level for many, 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 many months later. I think it was 6 months. After we did, it was easy street. Did you like easy street? Because I know I do. We start off this year at a 44-day uptrend. That's easy street. We had 3 uptrends this year. That's easy street. Easy street's coming to a theater near you too. You just have to be patient and wait. The hardest trade. Average traders are losing money in no trends and downtrends. I say it all the time. Don't be average. Listen to the tape. Turn off the TV, all the social media. All you need is price. Open up the email. When it says uptrend, be aggressive. When it says downtrend and no trend, conserve your profits, and we are having a huge year. Okay, so don't fall in love with this historical chart pattern comparison. It will diverge like all of them have done before, but until it diverges, we're going to use it as a roadmap. I said this video is going to be short. It's not going to be too short. It's going to be at least 10, 15 minutes long. But with that said, I just flew through stuff very rapidly. If you need to rewind it, you can. The bottom line is these shaded areas right here is where we make our money. That's a 44-day uptrend. That's a 15-day uptrend. That's a 22-day uptrend. And then we went to a downtrend right here. Let me just delete these, and you can understand. So I'll draw lines. There we went to an uptrend. And by the way, the IBD, I did this in the last video, and I had to re-record it, which I'm doing now. I do subscribe to Investors Biz Daily, and the big picture, or the bigger picture, every once in a while has some interesting comments. It pointed out the E-rating distribution on the NASDAQ, the Dow, and the S&P. Doesn't happen very often. Usually when we get to that kind of, I don't know if you want to call it capitulation or oversold territory, the market usually reverses on a dime and then we go right back up. And they said that happened on January 3rd. Interesting observation. I do like the IBD. It's not the trading Bible. I do like the bigger picture, and I do like accumulation distribution. With that said, the bottom line is, you could have the Trader's Almanac. By the way, in the Trader's Almanac, we have what? Pivotal lows Thursday, Friday before OPEC. So there's a lot of different trends that you'll find sometimes. And by the way, they're always going to diverge at some point, meaning it's going to be too easy to catch on to those trends anymore, and they don't exist anymore. So will the IBD be right about that? Who knows? The bottom line is we knew where our line in the sand was for investments. We knew when we went to a downtrend to preserve our money. We know when no trend we preserve money. Nasdaq's in a 15-day downtrend. So we already know we've been preserving capital for a while. Okay? When we broke an uptrend back here, what did David Patrick do? Real simple. I went to cash. It's not like I became extremely bearish. I just knew at best the market was going to be sloppy. And it was. Did I know that we were going to go down 20%? No. But I got long here. And by the way, when I went cash here, I am fully prepared if I'm wrong to get back in on price strength confirmation. No problem. I can do that. So when I went cash here, same thing. This is a double top. Triple tops don't hold. Guess what? I would have got long if we went to a triple top and broke out. That didn't happen. All right, so now what do I do? Well, very simple. I'm going to tell you what I'm going to do. I'm going to stay in all cash, first of all. I'm not going to predict the lows. And I'm going to tell you, this Dow Jones means something to me. I don't love trading the Dow Jones or even necessarily tracking it. Let's call it 25. What is that exact number? So we can write it down. The 200 SMA, 25,428. 25,428. Write that number down. It's big. 25,428. All right. Well, we just told you why it was big, and it's because the S&P back in 1957, and by the way, we will diverge from that pattern sooner or later, didn't get back above that 200 SMA for many months, and when it did, it was a green light, and the market just took off, okay? With that said, I have no intention of risking all these huge gains we have until the Dow wants to tell me that it has rules engaged back above the 10 SMA and that this 200 SMA is no longer resistance, that it's support. Now, it could happen on Monday. I don't know. Maybe it happens Tuesday. Maybe it doesn't happen until December. I don't know. But I'm playing defense. I hope you are. I hope you're listening to the tape until the market tells me that I need to be in it. I don't need to be in it right now. Cash is a position. Okay, we talked about performance numbers, 9% club. We talked about 1957. And what else? Oh, someone had emailed me something about Microsoft, when to be, when should you hold something longer term, something like Microsoft. We'll just flip right into Microsoft. This is very simple. It's all where your entry was, right? So Microsoft, we entered it here, and I think we entered it here. So you've scaled 3/4, and your stop, quite simply, is your entry. So you're holding this thing on whether 1957 repeats itself or not. If you're a swing trader, by the way, I am not a swing trader. You know that. If you're a swing trader, you're holding it versus your stop, versus your entry as your stop right now. Sometimes that works, and let's just give you 2 examples where it did. Well, Tesla. So we started following Tesla when it IPO'd, right? And we went long from the ESFL many times. But right here was when we really got aggressive with Tesla. I think it was $44 was our first entry. You had this area right in here. And what did we do? This was back in, a couple months since we launched the service. All we did is use a Fibonacci retracement between there and there, and we got long at $44. The reason why I bring that up is some people are still swing long Tesla from $44, and that's their stop. And that's what it should be if you're a swing trader. Getting back to Apple, when we launched the service, we never picked the bottom, right? We told people. In fact, we told people to short Apple here, and we said, do not pick the bottom, wait for inverse head and shoulders or double bottom or WV. Well, we saw the WV, and first we got long on this bull flag here, and then we got long on the WV, and then we added on price strength confirmation. So some people are still long Apple from 59, 62, or 65. Swing long infinitely versus their stop. So getting back to the question about Microsoft, A, it matters on your risk profile, your trade time horizon, and B, it matters on your entry price. That's going to be with all stocks. All right, so what else was I going to talk about? Let's fly through the indexes. There's the NASDAQ. We are broken down. To me, that's we're down 29 handles on ES. That's nothing. I mean, 50 handles is a lot at this point, 2% in one day. We're down a measly little over 1%. That is nothing. It's a no. So why am I saying that? Is because one day doesn't make a market. And then if this IBD is accurate by saying we're getting ready to be flushed out in reverse course, it doesn't matter if I buy into that theory or not. I'm going to wait, right? I'm going to wait for rules of engagement. But this day, this close below, yeah, that's obviously bearish, but it means nothing unless there's multiple days of closing below, right? So right now, yeah, that's great for the bears. They're winning if they get a close, but they really need multiple closes because one day never makes a market. Oil continues to look horrible, grinding lower, and it's just a sector you don't want to be a part of. When you look at oil futures, you had this golden cross, we broke back below it, and this thing, that does not look good. And all these oil stocks look really nasty, to be honest with you. The XLF, it doesn't look like Armageddon's happened. We had this V bottom, and we went in this wedge pattern. We're right in the middle of the wedge. Maybe we go to the bottom of the wedge. It's just, to me, it's boring. IWM's been a trading range for 4 months. It's boring. To me, I don't like oil because it looks very bad. A lot of times the market will diverge, doesn't matter what oil does, but we still have to keep an eye on oil because if oil does, let's just say, go revisit lows of the year or even the lows of last year, it will affect the market because there'll be margin calls and there'll be liquidations of good assets just because hedge funds refuse to puke out their leveraged positions and then they sell their good stocks. That's not how they should do it, but that's just what happens. And then there's distribution of all asset classes. I don't want to get too much into that, but with that said, oil looks bad. And the market can still go up without oil, but when you have now transports, the transports are very significant. Industrials and transports are very significant. These don't look good at all, and they haven't looked good since we broke right here. This is very concerning. You don't want to see transports to continue to lead on the way down. They just like the Dow, they have to get back above this 200 SMA. I can't get bullish this market until the Dow and the transports get back above the 200 SMA support. It really is that simple. IBB grinding lower does not look good. Gold does look good. This looks like it might actually want new highs of the year. And speaking of new highs of the year, I believe TLT's been in the 90% club 7 times since we launched the service. Now, you saw since I launched the service back in 2013, I posted I was long 0 coupon bonds. We made a very good amount of money on that. Was long preferred stocks, got some dividends on those this year and previous years. And I've been long TLT, and we hit it out of the park with the ESFL TLT. A lot of different ways to trade the bonds. And someone had hit me up on Twitter, asked me, I can't remember if they're asking about the yield curve or how it related to China trade, this, that. Quite simply my response is I'm not educated enough on giving a professional opinion on something like that. And whatever my opinion is going to be, it's probably going to be wrong anyway or 50-50, and we don't trade those odds. What we do trade is rules of engagement. We trade trend. And we know we've been paid on both. So we're going to continue to get paid on what works. So what works is trading rules of engagement with trend. And bonds continue to look fine. And when we look at a weekly on bonds, we don't need to know about trade, about inversion yield curve. We don't need to know any of that stuff. All you need to know is weekly looks good, daily looks good. This is bull flag in the daily. This is a great setup. This thing is probably going to 140, and yields are going lower. That's according to technical analysis, and that's what I am an expert or a professional at, and that's what I will comment on. So bonds look higher. Well, can they pull back before they go higher? Absolutely, like any stock does when it's an uptrend. But they look bullish. All right, let's flip to Apple. Apple broke the 50 SMA, continues to be bearish. I think it's a little bit late in the game to short Apple. I probably would short something with more downside. Not that Apple doesn't have more downside, but something from higher prices. Amazon, if that 200 SMA was not there, I think that would be ripe. It still might be setting up short. You just got to worry about the 200 SMA support. Netflix is in the middle of that wedge. It's really not giving us any kind of trading edge. Booking, that looks like it wants a 52-week low. Tesla's at a 52-week low almost every day. Google looks like it wants to retest lows. And once again, this is at 122 on a Friday afternoon. Things can change on a dime. They could change by the close. They could change by Monday's close or Monday's open. I don't know. As of right now, that's what the technicals are telling me. NVIDIA, yes, it's oversold. Can it bounce before it goes lower? Probably. but the chips look very bad. Avgo, Micron, OLED. I want to bring up this Xilinx because someone had brought up that, and I even brought it up because there was actually Xilinx, Vive, Lyft, Docu, CBOE, and Snap, I believe, all look decent on the chart. These are counter trend trades, remember that. So if you take these are lower probability trades. So why trade them? I don't know. This trade right here, break of a downtrend, MACD bull cross, is our setup. The problem is we're in a downtrend on the NASDAQ. Semis are horrible. And this pattern is not the same as this pattern right here. This is a bull flag breakout with MACD confirmation. This is our #1 price pattern. I hammered this thing with 300 calls, posted it on Twitter. Just like I hammered Apple, I think it was right in here. Bull flag breakout with MACD. I hammered that. So there's a time to be aggressive. When the indexes, the S&P, the NASDAQ are in uptrends, and we have sectors and stocks that are leading and or giving us our #1 trade setup, which is a bull flag to new highs or a bull flag with MACD confirmation. So getting back to Xilinx, I didn't want to make this video this long, and of course it is. Yeah, this might even be on the ESFL, but just don't treat it the same thing as this. This is a home run. And want to know another home run that we just saw? And by the way, this is when the market was, I believe, in no trend, was Roku. That's a bull flag to new highs with MACD confirmation. That's our #1 trade. Vive, even though the market's in a downtrend, that's a bull flag to new highs. So I would rather take Roku or Vive rather than Xilinx. Even if Xilinx ends up being a home run, it's a lower probability trade than a bull flag breakout. The only thing about this one is you don't have MACDs at new highs with price, but this still is a great setup for Vive to add. And Vive's been on the 90% club quite a bit. Now I got to fly through the rest of these stocks. I don't know how I got distracted here, but of course, now we're way behind schedule. All right, Splunk does not look good. Breaking the 200 SMA. FFIV, new 52-week lows. Team, MACD bear cross. It's losing some of its gains. CRM, Workday. Some of these aren't really telling us a whole lot. Baba, the 90% club. Baba and Baidu, both in the 90% club, paid fat. Box not telling us a whole lot. Are the bank stocks telling us anything? No, JP Morgan's just coming to fill the gap, taking us good old time, zero momentum anywhere. Citigroup, Bank of America. What does Bank of America doesn't look good. What does continue to look good? ICE, CBOE, CME. A lot of leadership there. The only thing about CME is you got old highs right there. So we talked about this CME. We said when it got down here, it went into an uptrend. We said what's going to happen in an uptrend? Going to go test the 50 SMA. It's either going to come and retest a low, break a low, or create a higher low. What did it do? Created a higher low right here. It then saw price strength confirmation. You had all the rules engaged in the world. It was not on the ESFL, I don't believe, but all the rules engaged in the world. We talked about it in every video. If you wanted this stock, and this was your stock, from down here to 166, that's a huge move. So the exchange stocks still look pretty good to me. CYBR, that's a little flat. Let's get to oil. COP does not look good. PSX does not look good. Exxon, to me, looks horrible. CVX looks horrible. The sector looks miserable. Is it oversold? Maybe. Las Vegas Sands, the casinos do not look good. Tilray, Kronos, CGC, these look like they're just trapping people and they're heading lower. Amgen, Guild, this whole sector looks boring and it looks bearish and then it looks boring again and it looks bearish. I don't really see anything in that sector that I love. Let's fly through the rest of these. CMG, bear flag, hasn't really shown any price weakness confirmation. Someone had, I think a subscriber must own this because they keep bringing up Okta. Yeah, this is a great looking chart. We talked about this bull flag above a break of a downtrend here, bull flag. So I don't believe this was on the ESFL. If it was, I have to double check. But we talked about this stock before. This is a great pattern. And if you're still long, that's great. If you're long it from here, that's your stop. You're long it from there, that's your stop. Good looking chart, good looking stock. Congrats if you own it. Congrats if you traded it. That's awesome. Twillo. That's a big reversal on Twillo. That was looking very, very, very ugly, and it's a huge reversal in Twillo. We'll have to watch that one. IQ does not look good. Docu looks pretty good. So Xilinx, Vive, we'll get to lift in a moment. We talked about CBOE. Is there anything else on this? No. Let's get to Uber. Uber looks okay. It's above this 10 SMA. I really would prefer Uber above this 42.24 before I would long. So if you're going this week and you're dying to buy a stock, well, I still think Roku looks good. We talked about Vive looks good. It's a bull flag. I like Lyft. I think, it's aggressive. To me, it looks a lot like, and this, I did not want to waste more time. This is not a waste, but I did not want to spend more time in this video because I said I was going to be short, and apparently I lied. But looks a little bit like this Facebook IPO where, and I don't know, you've got to throw out some of this stuff because it's not going to be exact. You chopped around here, and let's just assume this is the price pattern. I don't know, I think I was looking at right in here. Anyway, MACD is almost at the highs of the year, and MACD about right in here. So this thing could grind up significantly. Facebook did here also. So I mean, if we were looking at the first month, that's a pretty nice. If we did Fibonacci on that, I guess the high is up there. Either way, it doesn't look identical if I was looking at here or here. But this lift, I think, could lift up to $70 pretty easy. That's $13 or what, 20%, 20+%. So I like Vive for long, and I like Lyft for long. If they engage, they will be on the ESFL. ICE looks good. It can be choppy in this type of environment. You got to remember, any long trade is a counter trend trade. Don't fall in love with the 1957 extremely bearish outcome in the short term. Why? Because we can diverge in a heartbeat. Take into consideration what the IBD says. When the market gets to this E distribution where money's flushing out, a lot of times that's a capitulation type of bottoming process where the market just turns on a dime. And it doesn't matter if I think that's going to happen or not. Just pay attention to price and keep an open mind, because when we get above the 10 SMA, obviously I'd like to see the transports and the Dow reclaim the 200. But now I think the S&P really has to get above this 2840. This candle's high. Above 2840, that's probably where I'm going to start putting some long market exposure on. If we don't get above this candle right here, is high, 2840, I'm probably going to stay in cash and just day trade. That's all I have for you on the weekend market analysis, Charts Way Sleep, week 22. You know the drill, right? Downtrends, no trends, preserve year-to-date capital, preserve year-to-date gains. We're having a huge year. No reason to press right now. Have a great weekend. See you on Monday.